All right, ladies and gentlemen, you're on our forum. This is the place for a strategy we want, and we said everyone in our ecosystem should be adopting support and resistance strategy. It's very simple. Now, first of all, you want to observe order flow. All right, so I'm going to go irrespective of the time you want to use. Now, there are things I'm still going to add for you to help you, right, in this trading strategy. Support and resistance strategy is very, very simple, direct to use, and then it's going to simplify your trading. Okay. Yeah, I remember I sent this link, this signal out to some of our forum. I wouldn't know how many of our people are still on it. Okay. Now I'm going to take an instrument because I've already drawn on this. So let me take this instrument. Oh shit. So it's quite unfortunate that most of these have drawn a lot of lines on them. So let me look at Ethereum. So it doesn't matter which instrument is that. Okay, or let me look at AUD USD in case of, I know I must have drawn on this one. Okay, so let me look at, okay, all right, so let's look at this. I think this should be good enough. So let's observe the order flow. And to observe the order flow, you're going to go to HTF. The full meaning of HTF, higher time frame, all right? It's called HTF, which is higher time frame. So now, so we said, let's take any instrument, okay? That GBP USD, that Euro USD, and all of that. So HTF. So now we go. First of all, HTF, either 4 hours or 1 hour. So sometimes I like to go from 4 hours, come to 1 hour, and I'm able to measure all my timing I want to sell. Now, what you want to observe in HTF is it a bearish or a bullish market, right? Is it a bearish or bullish market? And do something very quickly that will help you too. You want to go to your background. All right, this is TradingView. So I'm not going detail of TradingView and all of that. So if you want to learn how to use TradingView, you can go to my YouTube channel. A separate video is there. Then you can just on how to put checklist, watch list, all of those things, set time, and those tools. So now what you're going to do, very simple. If it's going to be difficult for you, I will simplify it. How? Here we go. This is 4 hours. This is clear enough that this is an uptrend. For this, forget this place. Just cut off this place now. Cut off this place. Do as if this place back here does not exist. So this is a low, all right? And this, right? So this is a low, and this is a high. So because we only have two major swings now, become higher time frame. So let's go. So look at it. So this is a low, this is a high, all right? This is a low, and this is a high. So you expect a correction, okay? So you expect a correction. So as long as we are above this, so as long as we're above this, then, so we don't know how far we will come down. I just hope I will be able to simplify because this is the complexity of my trading. Okay, so let me forget this thing I want to share now. So what matters is that at a glance, you know where the market is going to. That's what I want to show you. At a glance, you should know where the market is going to. Excuse me. Because I was in a trade here. Okay. At a glance, you should be able to tell where this market is going to. So that's what we're going to do. So at a glance, we need to know where the market is going to. To know where the market is going to. At a glance, you need to know where the market is going to at a glance. A glance, at a glance, at a glance. You need to know where the market is going to. Just a moment, guys. I need to bring out something for us. Okay, I want to bring out something, so just pay attention, it's very important. Okay, so ladies and gentlemen, let's go. At a glance, should be able to know where the market is going to. So we took this guy. We say so go to 4 hours time frame, 4 hour and 4 hour and 1 hour time frame. I'm not going to explain so much about it because there's something about those time correlation. So, but let's go to 4 hours so that you can see the larger picture. Now, I've seen. So, what I actually want to check, because this is broader, is that I want to see the order flow. So, as I go to 4 hours, the order flow is we are bullish, right? It's an uptrend. So, very simple. Now, since an uptrend, if I like, I can mark some key environment. You can see where I mark here. So maybe in your case may be difficult for you to be able to mark this. What we use in marking this is called rectangle. Look at it. You have to now. So you are going to take an assignment and be placing your cursor on each of these tools so that we're able to identify. So I'm taking rectangle and I pick it. So I drawn. So are we equally drawn on this top here? All right. So here I draw, this is a resistance, okay? This is a resistance, this is a support. Now I draw another one, so I can draw a zone by zone. So look at this candle. This is the highest here. So I take from the wick of this candle to the body of that candle. All right? So you can see what I'm doing now. I'm partitioning so that when you are trading your support and resistance, you will find it difficult. So zone by zone. So I like to draw it this way. So and all of this one you're actually doing too, they are equally what? Are key levels, okay? These are key levels, right? So get this zone. And so do I actually need to go this is too far? What a waste of time, okay? You don't need that time wasting. So let's go. Now step down to 1 hour to actually still get, excuse me, to actually get more sub key levels. All right. So and all this other one. So when I go to 1 hour, see what I want to get. I want to see yesterday high. I'm going to use. So sometimes it's difficult to you. You go to trend line. If the trend line is going to draw your hand, because you're instead to draw trend line draw your hand. So you use horizontal ray. Okay, use horizontal ray. So place it. This was yesterday high, and where was yesterday low? Okay, now that's one of the things. So because to use this to help you, you want to right click on your trading view, click on settings, and then see session breaks. Then you want to add it so that it can partition daily segment for you. So let's go. Assuming when I come in the day, this I will have shot this trade. Okay, so but never mind. So another point I'm seeing here, this is a pivot point, not the yesterday low. So yesterday low is actually here, somewhere down here. So I'm going to take it. This was yesterday low. That means this market actually went so massive yesterday. Very massive. Okay. You want to learn more about how to use Fibonacci retracement, then you need to enroll in our academy so that you can learn that. What I'm teaching you to pass anything you want to, any trade to be successful, profitable, and all of that is support and resistance. So all these things I'm showing are very important if you pay attention to them. Okay. So then this was yesterday low and this was yesterday high, right? Then I want to check another pivot point. What's a pivot point? A point at which market react and begin to have a massive move. So because you already have this, your 4 hours key level shown here, so I'm going to have this. So let's take off. So I'm going to have this. Then let's take off this guy because it may disrupt us. However, we need to have another line there because these are pivot points. Yeah, so you don't need to, indicator is not necessary, right? But I will tell you what to use indicator for. You get it right? I'll tell you what to use indicator for. So, and the two indicator probably you may be interested in using are MACD and 50 moving average, especially for your 5 minute, 15 minute, 5 minute scalping and day trading, and then 15 minute intraday trading. So 5 minutes and 1 minute for your scalping. And so scalping is your 1 minute, day trading is your 5 minutes, intraday trading is your 15 minutes. And so that's why I just combine everything. 4 hours is the external liquidity, and which is the higher time frame of your 15-minute trading. So internal liquidity or internal structure of 4 hours is 15 minutes. External structure or liquidity of 15 minutes is 4 hours. So get the correlation. 1 hour external liquidity, or 1 hour is the external liquidity of 5 minutes, and higher time frame. So why 15 minutes is the external liquidity of 1 minute. So if I'm a scalper, I have no business with other time frame. I just have time with 15 minutes and 1 minute, and then you are good to go. All right. So now let's go. So we have marked all of these points. This is 1 hour. So if you like, you can still identify some other areas, but I think this is getting too much. All right. So let's go. Now step down to, so if you go to 30 minutes, you just want to see whatever thing that you see in 1 hour, probably you're going to see in 30 minutes. So you don't need to go all around. So now go to 15 minutes. Perhaps you want to see other sub-key levels. And if none, no problem, you are good to go. So because sometimes, look at it, this is a price action. You can see this candle engulfing, and then you, after this engulfing, see your entry, and then you will have been taking profit here. So I'm just showing you. And we didn't mark this with the intention that when we come to 15 minutes, we're going to see this. But you have marked this before the market play out. And that's exactly what I want you to understand. This is what we call pre-market analysis. But sometimes in the job, you can equally still do it if you have a better understanding of what you are doing. Does that make sense? Okay, so now let's quickly now go back to our entry market point, because you are a day trader, and a scalper. So because 5 minutes, of course, and 1 minute is full of noise. The best time to be trading as a day trader or intraday trader is actually 15 minutes. But sometimes market can be very choppy, or depending on how much volume such market can have, like gold, NAS 100, they can have much activities in 5 minutes. But currencies, minimum I just take is actually 15 minutes. But 5 minutes, we are still okay because support and resistance. Now, so you are now looking at this market. Now we have set it this way. Remember what I told you from the 4 hours you mark. So 4 hours, I can put these zones. You see those zones we put here on 4 hours. So those are the zones we have put on 4 hours, right? Then on 1 hour, we have put all of these, and then for another structure. Now, the question you ask, Felix, is that what am I supposed to be doing? Now, listen, you don't just enter market anyhow. Now, the market has moved from here as at today. That was a massive move, right? Market opened from here. And what did the market do? Market opened from here, all right, and moved, like came down, which will do, and did what we call a kind of sideways move, okay? Maybe Asia section, Asia range. So the market range, unfortunately, in between and loop out. And we have said market move in 3 dimensions. Our smart money concept call it AMD, or for me, Felix call it. If you go to look at it here, if you go to my price action training, what do I call it? So if you are part of my student, I call it CED. CED, and the full meaning is contraction, expansion, and delivery. So I call it CED. So now quickly, because we are not here for story, guys. So here, market actually revolved, came down, and then sideways move, and then loop out. This is the expansion. This is the contraction. After the expansion, you expect delivery. Now, this is the beautiful thing. Remember, this was yesterday high. It has grabbed the liquidity up. That's why we said there are 3 things or 4 things that are very important for you: price action, liquidity concept, demand and supply, then discipline. These are the major things you need to be successful in trading: price action, liquidity concept. Let's just 3 things: price action, liquidity concept, and discipline. Now, so discipline inculcates so many things: the psychology, the risk management, and all of that, the patience, and all of that. Then the price action now is what all those market mechanisms, which is candlestick, support and resistance. Can you see now? So 3 things you need to succeed in market: price action, all right, liquidity concept, and discipline. 3. So take it home. 3 things you need to succeed in trading, all right? Price action, liquidity concept, and discipline. So there are other supporting tools, like you would ask, okay, what happened to people who are using wave? Those are different strategies, patterns, and which can still fall under price action, right? So price action, liquidity concept, and discipline. So price action here, is the movement of the market, which is the market structure, candlestick, and all of that. Now, liquidity is that those support area and all of that. So that's what we call market maker model. All right. So they come in and look at where's the market moving to. So market magnet from one liquidity to another. So now, so Felix, what should I do now? Can I trade? No. That's the discipline. Why? Because my setup is not giving me what I should trade. Why? The market has moved from one resistance to a support. It's at the support level now. Are you seeing now? It's at the support level. So what should I do? What I expect is that the market, all right, if this market is going to hit this point and bounce, because it has not hit that point, what this one is doing, the next candle now can flip here. So two things that you are looking at the support and resistance zone is that you don't just jump in, immediately just hit it. What are you looking at? Number one, I'm looking at this guy to actually maybe hit this and bounce and change direction. So that means I can go to like 1 minute to see that if the direction have actually changed. Number two, I'm expecting this guy to cross this resistance and return back above this resistance and now show a bullish candle. Then I will be buying. Now, what if this market now continue to move up and now go back up? That is his business. Because it has not met my condition. That's his business. And I can tell you that there's no move this market will move. Highest this market will move is that because it has broke structure here, it could move back and then maybe grab this liquidity, grab all of these things and sell down, or move back here and prop that. But for Felix, why will I need to put myself under high jump? So please, these are the discipline you must inculcate. Since the market has not given me what I want, I leave it. It's approaching, okay, why do I short when market have hit, getting close to a support level? Why do I buy when it does not show a clearer direction? Either it's going to bounce here or it will break this. So now, second thing, it may break this point. So that means you want it to break this and retest, which is break and reject. All right? Break and reject. Reject. So if you break and reject with a bearish candle pattern, maybe like golfing, hammer, there are different candle patterns. So if you want to understand that, you can just go on your browser and type. So because I'm not going to go into all of those details, okay? So that we can solve our problem. So you go to and say candle pattern, okay? Just type candlestick patterns. Look at it. So you can see different candlestick, bullish engulfing, and what they are used for. Morning star, hammer, hanging man, piercing line, three white. So these are more common. Morning star, shooting star, three black hole, hammer, all right, evening star, and all of that. So you can always see that. So, and you see what they are used for. So I'm not going to take any trade here. You say, but this one is looking as if it's returning. Yeah, it may return for a while, but is that what you want to be doing? But for scalper, they will take it, all right, because this is already on 5 minutes, this candle already engulfed this previous one. We have this the last candle, and then this already return, and this one engulfed. So you should be finding a buy. But for me, I have a template I'm working with, so I will not take this trade. But for someone who is just capping so much and all of that, it's going to take this trade. But those people don't use small lot size. They use big lot size, because when they find an entry here, when they find an entry at this point, let's look at it. When they find an entry at this point, even to this point, this already 15 pips for them. So these 15 pips, and they use one standard lot. They use one standard lot, ladies and gentlemen. Being that this, even the market is bullish. Okay, so look at what they will do. Okay, let me just show you. They come here. So that's why I say you must have a trading strategy. Okay, right? So they come. So where is it? So USD JPY. Okay, USD JPY. Okay. So for this short time, you just know that scaling are bear market, right? So, but you're looking at, okay, it has broken a structure, it should return back up to this point. So for a snapper entry trader, so it's going to click this way and you will look at it. So let's use 0.1. So this is wrong. So because that's not my setup, right? But, and then look at where it's going to take profit because it's targeting. So most of those traders use one standard lot, two standard lots. And for if it's currency, they use 3 standard or 10 because currency can be managed and commodities. Okay. So now look at it. So if I'm going to take profit here, 145.061 or just say 145. So if I'm going to take profit at 145, okay. So I go here. So here is a edit and take profit at 145. That's just $7.2. Who can it be up to 0.1? Okay, confirm. So I didn't use stop loss, so I'm just showing you. I'm going to close it, but that's because that's not how you should probably enter market and all of that. Okay, so you can see I've entered the market, I put take profit and all of that. But just like what I was showing you, your conditions are to be met that you know that this is a support to this guy to come down to this point. You can see, right? To come down to this point and it get a bounce here, that would be an appropriate entry. If this one that is happening now had happened here, that would be an appropriate entry. Though, if it were a zone you drew, it may be correct, but perhaps as it were now, the market should hit down to this point and then so interpretation. Now, interpretation is that this market, if actually when it hit down to this point and then showed a bullish sign, right? What am I doing? Very simple. I'm doing is that you now go to what we call your forecasting and measurement tools. So you click on this button, you see long and short. You need this because that's where we come to risk management. So you click on long. If it's long, you are longing. Haven't entered, you now place, and that's why you see that my signals always come with this picture. It's not a picture, it's a trade signal. Now, you now look at where is my stop loss? Now, if you look at this market, if you eventually come down here, there are so many liquidity for you to come and grab down here. I can assure you that if this market breaks this point, I will not long because there are so much liquidity. So look at liquidity here, liquidity here, liquidity. So these are liquidity areas. So when the market is bouncing off from a close range of liquidity and we have like a demand zone below, this is like a demand zone, be careful. Know that that market will do all means to grab at least one or two of those liquidity before returning. So, but be that as it may, because the market has reacted, perhaps maybe it may be a week down here, and you are now saying, okay, this is my stop loss, right? So if this is your stop loss, now remember our rule, you now know how much amount of money you are trading with. So quickly, now this is 13 pips as your stop loss. And I say if it's a swing trade, all right, if it's a scalping, it's okay. 13 pips is okay if it's scalping. But if it's like a day trading, you can go as long as 30 pips if you are trading currency, as long as 30 pips. If it's good, it's going to be more than that. Okay. So as long as 30 pips. So now if it's these 30 pips, depending on what conditions, so even here with tolerance, that if you come to grab this liquidity, you are still safe. Then your take profit 1:2. So this is your 1:2. You heard me right? This is your 1:2. Now, in some cases, when I'm doing 1:2, you see me that I will send market, I will put a line. So maybe at my 1:2, let's say this is my 1:2. And I say, okay, because I know that many persons will not understand, I will always say, take profit 1 here. Maybe I down my 1:2. Take profit 2 here. You see me put a line like, let's put that line now. Let's put it. You see me putting a horizontal ray like this. So let me change the color. I normally use orange. And you see there like this. And then I put another one like this. Good. So then you now see that this thing still go further. This is a resistance point. And then here you have the last point over here. So give out is me. This is like, oh, I've entered the long, and then this is my support and resistance. Now, we now say, once the market move up, right? Once the market move up, I'm already doing 2 in 1 because I was just to show you support and resistance strategy, what you're supposed to mark. But if you look at it now, I'm already doing support and resistance strategy and overall of your trading activities. Okay, so that's how it goes. And then the trade go on and on and on. Once, maybe sometime when the first take profit has hit, we now say adjust stop loss. So break even now. So to break even is to remove the stop loss from where it was above your entry point, so that when the market decides to crash or pump against you, it will hit your stop loss at a small profit instead of hitting your stop loss at that big loss you're expecting. Guys, can you see what I told you? That you should do nothing because your setup is what you are waiting for. So you can see that trade I went to enter, it was doing, and it was on profit at a point as if we were going. What did I say? I said, it's not. Be disciplined enough to wait for your setup to come to you. That's the whole thing, that why we're struggling. And another problem I have seen is that what makes a lot of us struggle is that we trade too many instruments at a time. Exactly, you are scalping, you are day trading. Why are you trading too many instruments? It's going to cause you problem. Pick one instrument per time. Guys, can you see now that we'll be in negative as it were now? So, right? But I can control that. It's not going to be too much for me. All right. So this is how we trade the market. Support and resistance. Now, I will do one other example again. Unfortunately, as I told you, I say I'm waiting. That's why you see me sometime I will send you guys a signal. And I said, we are waiting for the market to come down to this point. Look at this, my market now. Deliver perfectly. Very sumptuous. Because I got an entry from here and I short. Look at my take profit. And it hit my take profit, right? And now it has bounced. Yes. Now it has bounced. So, but this is still more very dangerous because the market look more. So this gap it created because something you are going to see. This what I do not actually want to enter to. The most important thing is that it has hit my take profit. If I find the condition favorable, I want to find an entry and I will be targeting up here. That is why support and resistance strategy still stand very, very powerful. Now I send this signal out. If you are in our group, so I made this video on the 2nd of May 2025. If you're on our group, I send this signal out in the morning and you can see what the market is doing. Finally, it's going to hit up to this resistance, which is 3267. What really happened? So here you go. And then you are going to see, and I say this is the target. So sometimes you take your mind off, you have put stop loss and all of that. The only thing is that if you hit your first take profit, adjust stop loss. And adjusting stop loss, there's a technical strategy we use in adjusting stop loss, not just anyhow, anyway. So now look at that's what gold is doing. And the exact thing what we did was I say, go to 4 hours, right? So go to 4 hours. So gold is actually a downtrend, right? But trying to return back up as it were. Yes, that's what you need to understand. Because if you look at it, we'll take off all of this. So actually, I can take off all of this. Let me take them off. So we did all of this yesterday, and we entered a trade yesterday. And this is the point. Those of us who were on our live session yesterday, we started 90 days challenge, and then the intro was yesterday. Now, if anyone who was in that intro yesterday will have enjoyed this thing that gold is doing right away. Why? Because we enter market at that bottom there. So now, if you look at 4-hour time frame, so we are going to get some resistance and support of 4-hour time frame. So if I look back here, overall of 4 hours, yeah, this was a major pullback of 4 hours because we are still up. Can you see now? We are still what? Up. Even if you start from here, we are still up. Let alone if you start from here. Right? So this is a low, this is a high, this is a low, this is a high. This is not a low. This is a stretch off, and then this is a low, and a stretch out, massive abnormal move. This is a high. So we are still in an uptrend as far as this guy is concerned. So what happened? If you look at it, let's take our 4 hours and draw our zone. So for instance, I'm going to have a zone drawn here. Even though it looks so far away, right? So, but it's a zone, 4 hours. So let me duplicate and let's check another one here. So look at another one here, right? So let's stretch it out. Even though they are now looking old. So another one you have here, you can capture these two together because it's just like a pivot point. But it may look so bogus eventually. So it looked like a pivot point. So we have to stretch further and pick this way. Look at it. Hey, are you seeing something? So look at this here. So this is the one that will be maybe more useful for us because this is more immediate, right? Then another one we're going to have here, look at it. This become like what? A resistance at a point, right? Okay, we have another one here. Can you see now? So they are very, very important because they are going to really determine whatever you probably may be doing as it were. Okay, you can stretch it out to go externally. Then let's take another one here. This is like pre-market mapping. And so you can ride freely without stress. Okay? So we will have said we should look for another zone here, become more clumsy. So what we're going to have, if you go to 1 hour, we will go to see more detail. So let's go to 1 hour. Okay. So perhaps I've marked even on 1 hour. So let me take this guy off now and take this guy to off so that it will not be too clumsy. Woo! Beg your pardon. Okay. So here is 1 hour time frame. If you look at 1 hour time frame, yeah, this resistance align with this, so we can be okay, right? So let's mark some other obvious point on 1 hour time frame. So that could be a sub zone, but I may change the color because this is now became more significant. So I'm going to change the color to green so that I will be aware that this is 1 hour zone. Okay, so let's just stretch it further. Right. So all these points are very important so that when you are doing your support and resistance, I will have just drawn a line, but it won't capture what I want it to capture. All right. So now let's go down to, I told you 30 minutes is going to repeat the same thing you are seeing in 1 hour. So no need. Oh my God, good. And if you're on our live session yesterday, that was when we entered this trade. So you can imagine the way the gold have been dragging from that point. That's why I say patient, discipline. Discipline is what gives birth to patience, right? And yesterday, when we entered this market, many of you knew what we did, all right, even though it was a little bit advanced. And what we did was go back to 15 minutes. There's something that we identify on that 15 minutes. and which was a liquidity concept part. What we identified yesterday here, what's going on? Okay, so what we identified yesterday here was what we call liquidity. Okay, was what we call what? Liquidity. Now, sorry, imbalance, right? So imbalance in the market. And we said we saw an imbalance in 15-minute time frame here, which was this guy. So let me take it to be dark. The importance of trading one instrument and major in it is crucial. So this is an imbalance, which is fair value gap. So we said, and I said, this is how I trade my own. And so everything here from bottom here to this imbalance is your entry zone. Anywhere there, they are your entry zone. But that sometimes it may do as if you will be left behind. That's the part of DCA. That so what I do when I'm taking all this trade, what I do is that I look at the week that initiated that fair value gap, and I mark it this way. So I mark it this way. So let me return it back to what color can be good for me. Okay, so and I said, this is what I do. And then times 3 of this. That is 1, 2. So that one now is already 1. And then I copy it. Move it down. 2. And I do again. I'm sure many of you who were on the session with me, and I say what? 3. Now, if this is 3, that was what resulted to we setting an entry yesterday, and I say my stop loss is going to be below top times 3 of that week of the fair value gap. All right. So that was my stop loss, and that's why you saw my stop loss was here yesterday. And then I entered the market from even here, you know, the market, okay, at first when the market bounce here, move, I still, so I can be wiring in more position, the part of this year. Once I exhaust my entry, like you are trading with about how much dollars? $50,000, and your, you know, your withdrawal down says 5% daily. So 5%, we did the calculation anyway. Say you are using 125 as what you can afford to lose. So that means if you look at it, let's look at this trade. What ratio is this? Man, this is 1 ratio, okay, almost 1:3 just from yesterday. And what have you seen? Almost achieving that. And how many pips is that? This is my God, this is 500 pips, guys. Just agreeing. So this was even not, so this some entry, and then other DCA entry was that your entry should be on top of this place, which was here, and then other more position that because you DCA. So if you look at it, when you take an ID entry, this is 1:5. All right, agreeing to lose how many pips? 110 pips, and making about 500 pips plus in. So it become an intraday, you understand, because this is 15-minute time frame. But because of that, we didn't actually enter it at that 15-minute time frame. We went back to 5 minutes, which in between, while this trade was running, your 5 minutes in and out have been fetching you money. All right. So, but on time, your 5 minutes can create panic for you, and you will jump out of the market that's supposed to still be healthy for you. Are you seeing that now? So this is a hybrid combination of support and resistance trading strategy. So today in the morning, as the market have done what it wants to do, I give another signal here where I tell people to enter, and then the trade is still running. So support and resistance strategy is old, primitive, but profitable and simple. And that's one of the things you have to pay attention to. Now, if you go to NAS that have just, I told you guys I was trading, and now see what has happened. Oh my God, God is faithful. So here, if you look at, go back to that 5 minute, what has happened? And so if you are not trading with this same instrument, you'll be dilly dialing, right? So here, the guy came down, grabbed, right, and then return back to the zone. This was highly engulfing. If you are not trading this continually, you are going to make a very big mistake. And then you jump. Before you jump back, the deal is already done. Okay? That's the thing you need to understand. Guys, can you see why I said you should not enter this market? From the beginning of this class, I told you that you should not enter. If you go to my trade now, I will be in big loss. So I told you, I said, this guy is going to break this. You wait for it to break. And look at this, I may be in plenty loss, $19. So guys, I did this intentionally so that you will be able to learn and see your mistake, the error you make. You were carried away by this candle. Meanwhile, there's something just pushing it. It was just a mere pullback because you already marked all your point, ladies and gentlemen. Now, if you look at it now, this is a liquidity. So if I check this liquidity here, right? If I check this liquidity here, and let's see that if it's going to grab this liquidity and return back, like I've told you, I said, if me on this support and there's a liquidity below, I will be very, very careful because there's another liquidity before you get to the demand zone. And so here is going for this liquidity. If you grab this liquidity and return, fine. Now, but look at it. And I told you, I said, ordinarily, you that you have short. Remember, it was not one position you short. You didn't short one position. You short 1 or 2 or 3 positions. You have taken profit on one. All right. You have taken profit on one. And then the other one are running. Here, are you seeing it to be grabbing liquidity? It's still selling down, ladies and gentlemen. Okay. It's still what? Selling down. Can see the effect of entering a wrong trade, right? Because you just see the market. I said, you shouldn't do anything because your condition are that this guy should come here and bounce or smartly, because if the candle was heavy, cross it. That's not a smart money concept that you people want to trade. You want to see a fast move to know that it's actually a manipulated candle, but the one that normal retrace, break or structure, then move is not going to be okay. We're having this one is normal, just like a retracement. So if your care is not taken, you are returning back here. So patience is required. But I can tell you that if you don't have the right knowledge, your patience may not be complete. I think that's one of the biggest problems people are having now. Now, and I told you, I say, so to help you, to just give you a confluence to your trading strategy, which is support and resistance. So don't go for too much complex thing. Learn how to perfect and work on this over and again. Perfect is very simple. It's you want to add moving average, which is 50 moving average, especially when you are trading with 5 minutes, 15 minutes, and all of that. 50 moving average and MACD, MACD. It will help you. You are not depending on MACD, right? You are not depending on MACD, this one down here. You are not depending on MACD to trade. You're only using it to aid your decision. Okay, just to help me confirm more and all of that. So if you look at it now, look at your MACD. Look at it here. What is MACD actually used for? I think I've done explanation about this thing before. Now, MACD have 3 components majorly. We have, or you can call it 4. Here we have the MACD line, the signal line, the histogram, and the zero line. So these 4 things are very crucial. And how do you use these 4 things? When the MACD crosses the signal line down, right? A down cross of MACD that is going below signal line is a sign of selling pressure that we are going down for that time being. But one of the disadvantages of MACD is that it may not be able to work in a choppy market. But there's something most people don't use MACD for in choppy market. They just want to find buy, sell, buy, sell. No. One thing is that I observed something in MACD. when market is not trending, it will squeeze, just like Bollinger squeeze. It will squeeze. So that means you are not meant to trade that period. That's the problem. Can you see now? You are not meant to take trade because no volume, no momentum. So you are going to have a wrong signal. But look at it here. MACD crosses below signal line and volume indicated that there are selling pressure. Then, and you now align with the price action, you are good to go for sell. Now, all of this cross here is very delicate because if you look at your price action, it's not going to give you anything. We continue to sell until you have exactly when it's below, exactly when, although it shows like double bottom here, exactly when it's below the zero line, you want to be very careful. However, I know you probably may take this trade because the momentum was strong a bit, and this is another massive sell, and that's the sell that still continue. This sell is not ready to reverse here because the more distance the MACD line creates from the signal line, the stronger the trend. And you can see massive sell-off, a kind of as if I'm recovering, another continuation, and that's exactly what sometimes you use MACD for, right? Can we see now? Look at it. It was moved sideways. So what signal will you take here? Because market has already crossed zero line, MACD line, and look at your moving average. So your moving average to anything below your 50 moving average, you want to be fine locating buying, right? You want to be looking for buy instead of selling. And that's exactly what we're doing here. A pullback, more sell, a pullback, more sell. And that's why I said you cannot add 50 moving average into your, there are so many moving averages, but are they all too necessary? But if you understand price action properly, you won't be under any pressure. And that's exactly what you do. So you look at it, the market continues to sell. Even when at this point where we sell, I'm sure our loss now should be about 20 something or close to $30, about $26. So look at it, perfectly where we bought from was where we're supposed to be selling. Now, what could cause this type of decision is that, number one, if you lack discipline. Number two, if you are not consistent in the instrument you are trading. You jump from one instrument. It's not as if you cannot have more than one instrument that you are trading. But at a time, as you pick one in this trading season, pick that one and exhaust it properly rather than jumping around. And after all, you have marked all of this point. And I told you that I'm always being very careful when a market, when a market is having liquidity below my support. I know that that support will not stand. That support will not stand, ladies and gentlemen, because liquidity to be attracted to it. And that's so where should I be expecting that I may see a buying position or opportunity? That is this region and all of this area. And if they fail, of course, look at your ultimate down, right? So that means you now be looking at all this region here. So I should look and map it out again. So the market will continue to sell. We should be on $30 negative by now, or $30-something negative. $30, guys, right? This is not good. So that's why you're always under pressure. Oh my God, hey, you enter. No. Take it easy. This thing is not difficult. You will complicate it. Trading is not difficult. We only complicate it. So write it down. Trading is not difficult. We only complicate it. And one of the things that make us complicate it is ignorance. And what causes ignorance is no lack of readiness to learn. We are not humble enough to settle down and learn. We are always in a haste. And that's the whole thing. So you can see, very simple. So imagine you come today and you find all of those positions, right? You find all of those positions as you come into trade for the day. And perhaps this is right around, this is Asia section after grab the, so a strong market is when the market open and grab the daily high or low, man, they are powerful. And remember we said this guy is this is your previous day low now. So you can see now that it's almost exhausting the yesterday candle. This was yesterday low, right? So it's heading towards yesterday low because it has collected the liquidity of yesterday high. So perhaps, maybe when this market will bounce, maybe in a New York session, right? And at that time, we'll have grabbed the yesterday low and then get bounced up. So that will have been a beautiful setup or sell-off for you, either from 4 a.m. or even when you wake up at London session. So this will have been continuing selling and much money. I'm sure if you can settle down with this strategy, you are going to be happy with yourself. That's the truth. And so, ladies and gentlemen, I think this has actually combined two things I actually want to do separately. I wanted to show you, so talking about your trading strategy and what to do, all right, your daily routine. So I think that your daily routine, so it's going to be combined. So it's just going to be combined like this. And daily routine, right? So it's going to be combined like this and daily routine. So now let's quickly go. What's your daily routine? It's the same thing. So first, you want to go to macro. Your daily routine, that's experimenting support and resistance trading strategy with guiding rules. Number one, macro observation. Pam, you go to news and update. All right? Okay, you go to news and update. So let's go to news and update. And where's your news and update? Forex Factory. Okay, Forex Factory. Let's go. Okay, so Forex Factory. And this is Forex Factory. So you look at today's date, and of course you can change the setting of timing to your time zone so that you will not be calculating wrong thing. So let's go. Today is 2nd of May 2025. So what news do we have today? That's economic news. So at 1 p.m., we have average hourly earning, which is very important. No farm payroll. Ooh, this is a wicked news. Unemployment rate. So these are the major news today. So you want to be very, 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 very careful in your trading, okay, because of this news. So you have come, oh, this is the, at what time? 1:30 p.m. That's aligned with New York session. Oh, any trade you are entering, you are careful so that you want to know what's going to be the outcome. That's number one. Number two, you're now going to your, so macro is the first thing. Then number two is when you now go to your trading view. Okay, guys, I think you want to say, I'm grabbing this liquidity. Maybe if you can be satisfied with this liquidity, you return back to this zone and give me a kind of bullish pattern with candlestick. Then maybe enter here, new candle, go sideways, continue. Then I can now buy more to edge my trade. You see that when you know what you are doing, you will not be under pressure. Well, if you don't know what you are doing, we're $30 loss, that we're $23. So if you don't know what you are doing, you'll be under pressure. That's the truth, right? So that's like the scripture. God give them restaurant about. Not that there's no trouble, but in the midst of trouble, because they know what to do. God. Okay, so that's the simplest pattern I can give to you for you to pass your challenge. Other things are, your personal strategy or routine, which I've set aside, and I said how much you should be using, what's your account size, and all the like. So if that is done, you have done all of these to say, okay, I've checked this market move and all of that. I check the order flow. I mark my support standpoint. Market come to my point. I get my conferences and confirmation, and I enter the market. Then I continue to trail my stop loss. Why? Because market can be unstable, right? And after all, if it's getting close to the news time, I may not know what the news is going to do. If I'm taking my first profit, second profit, and the news is coming, I usually remove my stop loss because definitely the news can come and grab my stop loss and still go the direction. Or better still, if I'm in profit or before the news, I will exit all my trade and wait for the news. Once the news comes, we'll do it abracadabra. Like 10, 15, 20, 30 minutes thereafter, markets settle and go the direction they want to go. At that point, we'll have given you a discount entry and then you take it. Now, please take note. Few things I've said was that if you are trading, so which is good, let me summarize it. Any account size you buy, like on your trade mastery, so any account you buy, work with your overall drawdown and daily drawdown. Okay? And so this is the thing. Work with your overall drawdown and your daily drawdown. You heard me right. Work with your overall drawdown and daily drawdown. Okay? So work with your money management for your profile, your money management on prop firm accounts. One, work with your overall drawdown and daily drawdown. Expose 10% of your daily drawdown per trade. Okay, next is split your lot size in multiple small parchments. In multiple small parchment. Okay, so I hope my English is not too much. Okay, in multiple small sizes. Okay, so now, for instance, what is your, I use a case study, what is your daily drawdown on 1,000? Your daily drawdown is 500 because it's 5%. So 10% of 500 is $50. So that means what you are exposed, you're expected to expose into the market per time as your risk reward ratio is $50. So now if you are trading currencies, each can be, so if you are trading currency, each can be $10 of your stop loss. That means you are going to enter 5 positions. So what will amount to $10 will now determine your lot size. So if you are calculating, and that's if you are day trading, if you are day trading intraday, your 30 lots stop loss is still okay. But if you are scalping 10 to 15 lots is okay. So now, if you have $10 that can be afford to be lost, and you want to work with 10 to 15 or 20 pips, so 0.05 is 50 cents. So 20 lots is $10. So that means 20 lots for stop loss of 5 position, and you want to lose $10 in 5 position, which is $50. So that means you can afford to put 0.05 for each entry, which means calculating $10 each if the stop loss hit. So calculating 1:2 risk reward. So that means your lot size will be 0.05 times 5. So 0.05 times 5 is equals to 0.25. So that means your lot ordinarily for that trade is 0.25, but you split it into 5 places. If it's gold, don't try it. Gold, NAS, your account is that go lower than what I've just said. Okay, so maybe like if it's gold, highest 0.1. So divide your 0.1 to 5 will be 0.02. Does that make sense? So expose 10% of your daily drawdown per trade. Split your lot size in multiple small sizes. I hope this should be important and enough for you. All right, thank you, ladies and gentlemen. Sure, you have learned, and what we said is not magical. Guys, can you see now? So the guy has actually responded. Remember I said MACD, that's showing like he wants to return. So if I go to 1 minute sometime, you want to see market structure shift. I hope I will not complicate this teaching. I hope I will not complicate this teaching. But even if you go to the 1 minute, for the fact that just that, one of the good things here is that liquidity have been swept, right? But if you look at it forward, you still have resistance ahead, which means ordinarily the best place is that the 50 moving average will be crossed. So now, ordinarily, that entry you entered here will have been the best first entry, right? Here will have been the best first entry, because if you look at it here now, the market has come, created a low. But I can tell you, if this market must go up, look at what's going to happen. If this market must go up, look at what's going to happen. It has pulled this, and then this is a high. Oh, 1, 2, 3, no. Okay, it has pulled this. This market is going to return back here because of this FEG. So that means you expect this market to actually return back here, perhaps because of this this point. So, but you expect the market to return to this area. And so if you return to this area, if I use my style of entry, okay, if I use my style of entry, that will be here. Okay, so if it's here, let's take it this way. So if it's here, so times 3, this is 2, right? And this is 3. So that is to say, my entry coming anywhere here, so my stop loss okay, can be anywhere here. But remember, we said something that because the nature of the market, so my stop loss just somewhere a little bit below that. And then calculating 1:2. Calculating 1:2. It's already 1:3, okay, but calculating 1:2 will be somewhere. Wow. Somewhere below even the 50 moving average. Because if you face one instrument, now for sniper entry traders, the moment this one has happened, because this is an engulfing and this is a liquidity sweep, the moment the market return back to this point, they find one entry. Yes. Then they wait for this one. When it come down here, they add all of those ones. Their stop loss is still below here. And then when everything mature together, they're going. So, but you can't do all of this if you are trading too many instruments. But while you are supposed to be studying this one, you are jumping around and it doesn't really work. So you now find, so let's say like those 5 positions I say, you have found like 1 or 2 here. That one is running profit at first, now moving. Then the market decide to come to this inside this zone, maybe another entry at this 50%, and then another entry here. And then so then you are waiting. All your stop losses are here. right? And then, boom, the market move and then come down. So you can see patience that's required for this trade. Let's look at our trade that was on, okay, we are now at $22 negative. So you will patiently wait, right? You can see now this market certainly will come down to mitigate this. No, I come down to 1 minute. So probably may not understand. So there are so many things around it. But support and resistance work like magic, but you need discipline to follow the instruction and be able to maximize it. I will show us this, how it plays out eventually. All right? So you have any question, don't hesitate to ask me. Thank you very much. Bye-bye. And again, sorry, if you want to learn more detail how to go about all of these things, you can connect with me on the WhatsApp number +234 9047044998, and we put you through. And then if you want to enroll in our academy, why not get enrolled so that you can have the skill properly, you get more trained, and to be able to be trading independently. Thank you very much. Do have a nice time. Bye bye.